Well, we think that, when we look at the global economy, we are still in a recovery phase. Of course, what we are seeing on the pandemic side in the last few weeks has been very bad, but I think this doesn't change the picture for 2021. It's a year of where we're going to see a recovery pretty much across the globe. Valuation is, I have to say, a little bit kind of is not particularly appealing, but the alternative to equities are actually not there. So I think the combination of positive growth, the fact that central bank will still provide support, and the fact that there are no real alternative to equity should be a boost for equity pricing. But having said that, positioning, sentiment is high, valuation, I said, not particularly appealing. So the upside is not as big as it normally is in the first full year of an economic recovery. But we're still pretty much optimistic. We like emerging markets. We think that bond yields will rise a little bit. But it would be not plain sailing, but again, a good year for equities, but still volatile.
Luca, can we talk about some of the negative scenarios and what's baked in as we talk about some optimism in the markets? The first quarter looks to be somewhat of a write-off with more lockdowns and restrictions required to tame the virus. But what happens from here if this extends into a second or third quarter, and also the other scenario around vaccines, because there's still some doubt about how they work with the current variants and the successful rollout of inoculation programs with some delays to second vaccines. So how do you piece together where the market has those negative scenarios and some of the overconfidence that might be in asset classes?
I think to be very clear with you, the market is priced for almost for perfection. So I think if something goes wrong, and hopefully not, on the vaccine side, the rollout, I think the market will have a very difficult time. I think, though, what we have learned from last year is that the market is able to look through the crisis. The vaccine is there. It will take time. There will be logistical issues. But as long as the vaccine is effective, the market will actually price in the recovery, even if it will take a few months more. The real downside risk, as you said, is the rollout of the vaccine. If it's very, very slow, and economic data starts to get worse, I think then obviously the negative scenario will be reflected in the market action. But for now, and that's also what we've learned from last year, as long as you see the light at the end of the tunnel, I think the market will not have a significant correction. It can only, I think, we can see, of course, a short-term correction, but the main story is still pretty much intact and positive for risk assets.
Luca, normally when we, and good morning to you and Happy New Year, my friend. Normally when we say something's ripe for a rally, it's because, we've come off a lot, or it's undervalued assets. Just to recap from our viewers, we have rallied 67% on the Dow from the lows, 70% on the S&P, 92% on the NASDAQ. We've rallied 105% on the Russell 2K, and Dow Transports are up 90.7%. How can we be ripe for a rally when we've got those in the bag?
Well, I think, it's all about, I think, the business cycle at the end of the day. Last year, the markets obviously had a panic. Then we had a strong recovery on hope that the economy will go back to normal. It will take time, but as long as this prospect is correct, I think there is much more upside. And I said before on valuation, yes, valuation is not particularly attractive. But what are the alternatives? Definitely not in bonds. Even credit is not particularly attractive from our point of view. So it's almost inevitable that investors will start looking at equities. And when you look at flows have been very significant, but only the last couple of months. We have seen last year significant outflows from equities. So I think there is still upside, but as I said, the upside is limited because the market is priced for perfection. We have to be aware of that.